Hello and welcome. In this presentation, we will explore how relief funding affects your taxes. Disclaimer: the information contained here has been prepared by Civitas Strategies on behalf of the New Mexico Early Childhood Education and Care Department, West, and Growing Up New Mexico, and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute an attorney-client or any other advisory relationship. Reproduction of this information is expressly prohibited. Only non-commercial uses of this work are permitted. In today's conversation, we will discuss how to recognize key relief programs and their general tax implications, identify the general impacts of relief programs on tax filings, and use this information as a resource as you prepare to file your taxes. This information is intended to serve as one of many resources in your toolkit. It is not a substitute for, nor should it be construed as, personalized advice from a tax preparer. Both the state of New Mexico and the United States federal government have dedicated many resources to support child care programs through the COVID-19 pandemic. Relief funding saved many businesses from permanent closure, perhaps even your own. While these relief funds were highly needed and well used, many child care business owners have wondered how this funding will affect their taxes. Different relief funding programs will have varying impacts on your federal and state taxes because different funding sources are governed by different tax laws. Most state relief programs, including Cressera, New Mexico, provide funding to cover costs you have already paid or will need to pay soon. Consequently, you must report the funds as income on your federal taxes in the year that you receive the payment. This means that the federal government will tax your grant money at your federal income tax rate. Because you will need to pay taxes on relief funds, your tax bill will most likely increase. However, this can be offset by claiming expenses paid for by the grant as a business deduction. Let's look into the upsides of relief funding in the tax process. First, federal taxes on relief funds do not affect how greatly you are taxed on your earned income. The additional tax money you are paying is being taken out of the funds you receive from the grant. Second, expenses covered by the grant continue to qualify as a deduction. Let's look at an example case. Ashley was eligible for funding from Cressera, New Mexico, and she received a total of $5,400 in support in 2022. Ashley allocates the money to her rent and utilities. When Ashley does her 2022 taxes, she can still report rent and utilities as expenses. They qualify as eligible deductions. This means that Ashley is reducing her tax burden by deducting eligible expenses, even though those expenses were paid from relief funds rather than Ashley's earned income. Ashley's 2022 earned income is $40,000. As a single filer in 2022, Ashley would owe the federal government $8,581.10 in taxes if she did not receive a grant. However, Ashley needs to add the additional relief grant she received to her income. Ashley adds the $5,400 in relief funds to her taxable income. Now, Ashley's total income is $45,400. Since Ashley is in the 22% federal tax bracket, she is taxed an additional $380.82 on the $5,400 relief grant, which increased her federal tax bill from $8,581.10 to $8,961.92. Although Ashley's federal tax bill did increase by $380.82, Ashley was able to directly put $5,019.18 of Cressera, New Mexico grant funds towards her expenses. Ultimately, Ashley ended up with more money than she otherwise would have had and was able to reduce her tax burden using relief-funded deductions. The receipt of Cressera, New Mexico funds allowed Ashley to help her business and her family. You may have received the Employee Retention Tax Credit, ERTC, and/or the Family First Coronavirus Response Act, FFCRA to help reimburse payroll expenses that you maintained while your business operations were impacted by the pandemic. Both the ERTC and FFCRA are refundable tax credits meant to offset wages that your business paid out. Funds received from the credits are taxable and will be included in your gross income for federal or state tax purposes. Please consult with your tax professional regarding these tax credits. If you received in-kind gifts of tangible supplies rather than money to buy the supplies, you most likely will not face a tax liability. Consult with your accountant or tax preparer to determine the best way to record the donation. If you receive pandemic relief funds, it has likely been and will continue to be critical to your child care business's financial operations and recovery. Even though this support can increase your tax liability, the new income that it offers you is valuable. The best way to prepare for this taxation is to organize your expense documentation, such as receipts and payroll, and differentiate the source of income used to pay for your potential deductions for federal versus state purposes. This is because what you are allowed to deduct may vary for your federal versus state tax filings. You should then set aside an amount of funds equal to your marginal tax rate so that you are prepared to pay any owed tax. If you are unsure, you can use 22%, which is the most common tax rate in the U.S. For more childcare business tax resources, visit www.civstrat.com/taxes. Need more help? Visit www.crisernm.org to find our contact information, sign up for coaching, Criser New Mexico provider resources, ECECD recommended tools to help build your business, and more. All resources available in English and Spanish.